So next, we're going to move into our Venture Capital and Dealmaker panel. And this was not really structured as an almost all-female panel, but it turned out that way. I'd like to welcome first to the stage Anna Lowe, partner with SoftBank China and India. Anna is an early-stage venture investor. She helped to form the fund in 2006. She's based here in Hong Kong and responsible for leading investments in China, India, and Southeast Asia. Next, I'd like to welcome Melissa Guzzi, managing partner and founder of Arbor Partner Asia. And Melissa is an early-stage venture capital investor as well. Previously, she was a managing partner and leader of Asia for Vantage Point Capital Partners, where she successfully built up the Greater China portfolio and the investment team. Next, I'd like to welcome Rebecca Zhu, co-founder and managing director at Asia Alternatives in Beijing and Hong Kong. I've known Asia Alternatives for a very long time, and glad to have Rebecca here as well, not just because of the similar name, but for other reasons as well. She leads the firm's investment committee and co-leads its investments in expansion and growth capital funds. Next, we have Tom Britt. He is a corporate partner at Debevoise and Plimpton and a member of the firm's corporate securities M&A and private equity groups. His practice focuses on international M&A, private equity financings and buyouts, and capital market transactions. I'm sure you're in for a great treat here, and not forgetting Nisa Leong, partner at Qiming Ventures. Yeah, Nisa, I wouldn't forget you. All the great times Qiming Ventures has spoken at our events in Shanghai, Beijing, and Silicon Valley. Nisa is based here in Hong Kong as well. Qiming is a pioneering venture capital firm in China based in Shanghai. Nisa is here in Hong Kong, and she leads the venture firm's healthcare investments. She does some really, really interesting deals, and including medical devices and pharmaceutical deals. So I'm going to moderate this one, and we will also take some Q&A at the end of this too. So bear with us. Okay. Yeah. Everybody take a mic. Oh, okay. I have it. Thank you. Well, this is an all-star panel. I remember as a journalist covering China venture capital, and I don't know, a decade ago or more, and I spent more of my time in Hong Kong. And then I just realized that a lot of the venture capital investors were moving to Beijing and Shanghai. So I started going there more regularly. But now I think we're starting to see a reverse phenomenon, and we're seeing a number of really leading edge, cutting edge venture capital firms based right here in Hong Kong. And I was just in Beijing last week, and I think the Hong Kong venture scene and startup scene is still a little bit of a secret, but maybe not so much after this event. People in Beijing were saying to me, well, why are you doing this in Hong Kong? And I said, because there's a really vibrant startup scene happening in Hong Kong. And I think the number of startups and accelerators and venture capital funds and angel investor funds here really signify that. But don't let me monopolize this conversation. Let me ask the panelists, what's your outlook for Hong Kong's startup scene to take off? What are the challenges and what are the opportunities? Melissa.
Sure, I'll go first. So like everyone else, I spent most of my time flying back and forth from Beijing to Shanghai to about 2 years ago. And I met a startup company here called InvestLab that City Ventures was looking at. And these were some expats actually from the US who had been in Hong Kong a long time. And they would go to Silicon Valley and talk to some VCs about funding their startup. And the VCs in the Valley would say, well, go visit our China teams. And they'd go visit the China teams and said, well, Hong Kong's not China, so we don't want to fund it. And it turns out it's absolutely a terrific company with great prospects. Valuation was very reasonable because there's just wasn't a lot of people willing to fund it here. So Citibank, and when I was at Vantage Point, we decided to fund the company. It turns out that they're not necessarily focused on the China market, but they're taking advantage of the money flows of cross-border trading that's going on around Asia. So that's a good example. That also occurred for our company Demis. So I see it more and more that the opportunity set here, there's a very high threshold to be here. There's a lot of really great entrepreneurs, and for some reason, whether Silicon Valley doesn't want to do the Series A and the Chinese venture capitalists want to stay in China, it's a great opportunity for all of us.
Yeah, it's interesting too because if you have fewer firms competing for the good deals, that's great for the whole return aspect of it as well. So I remember also when many of the venture capitalists moved into private equity investing, but then the VCs who were still doing venture capital investing said, well, hey, that's great for us. We're going to get all the good deals and, make the better returns because it's not so crowded. But yeah, Anna, did you want to?
As an investor specializing in the mobile internet industries, I was based in Shanghai up till September 2011. And I moved down here thinking, this is probably an easy hub for me to fly in and out as I covered the entire region. But I started taking part in events organized such as Cyberport, meeting the companies that are residing in the incubator program. And I find that, for me, it's up and coming. It's at its early stage. And I'm very glad to see that the angel investor scene starting to develop, because that's a very key source of where I'll find my investments. So still on a bit of a watch mode in Hong Kong right now, but for the mobile and internet industries, I think it's still some challenges ahead. I think maybe it's got to do with schools, got to do with talent, people who can afford to live in Hong Kong. They're more than just, the tech infrastructure challenges to overcome. There's a lot of lifestyle issues as well.
I would add that I think that the fact that Hong Kong is an international financial center gives the community of companies that are dependent upon early stage and venture capital financing a tremendous advantage. There's lots of those types of financiers here. There's a whole network of highly professionalized service providers who will be able to help those companies adopt best practices very early on in their stage rather than adopt something else and need to fix them later at considerable expense, both of money and time. So I think the fact that there is a community of young companies here in Hong Kong as an international financial center gives them a very significant competitive advantage globally.
Yeah, there's a real ecosystem here. A number of stakeholders represented here in Hong Kong. Nisa.
If I may add also, I've been involved with the largest business plan competition in Hong Kong for about 10 years.
Uh-huh.
So, every year we have about a few hundred business plans submitted.
Wow.
And on top of that, I've also on the board of Science Park, and I see a couple of representatives here. Mm-hmm. And with Cyberport doing such a great job. Mm-hmm. And I think the ITC, the Innovation Technology Commission, is very keen to attract more returnees coming to Hong Kong to start companies, not only in mobile apps, but also, we talk about medical devices and so on and so forth. Right. There's actually a lot of startups being housed, especially in the last few years. Mm-hmm. So I think, in fact, Chi Ming has actually invested in a Hong Kong-based company, and the company is doing really well, Convenient Power. So, we believe as a venture investor and a Hong Kong, active, investor, we believe that the startup scene has changed in the last few years, and it's very promising. And another thing that I also want to add is China government is actually providing lots of funding, in the area of pharmaceutical and whatnot to startups. But the requirement, it has to be 100% domestically owned. So if a entrepreneur holds a U.S. passport, then they almost have to find somebody else to hold that entity for them. whereas Hong Kong, the Hong Kong government is providing a lot of support to startups. So this is actually a great place to be in now to get some funding and support from the government as well as angel, investors here.
Rebecca, what's your view?
Let me just add my personal observation, and I'm the last to speak, partly because I am the most removed from the entrepreneurs. My firm is actually a private equity fund of funds. We usually don't invest directly into companies. We invest in funds. And certainly in the China market, we are very interested in the overall venture market, and so we have funded a number of very successful early stage venture funds. My observation of the one big difference between the mainland China market and other markets that we invest in where there is venture, for example, India, for that matter, with a place like Hong Kong, I would say that earlier the two tech chats had mentioned about this ecosystem concept. From that point of view, my takeaway is the Hong Kong venture ecosystem seems to be, in terms of the development stage, behind what it looks like in China and what it looks like in India. So let me give you one big example. In China, in the last 5-6 years, one of the most meaningful phenomena, and especially towards the early stage, and we said very often in Hong Kong you get A round and B round, you don't get a lot of substantial angel funding. What had happened in China that helped develop the early stage companies was that there had been some very strong angel funding available. We call them super angels, right? And who are these super angels? These are successful entrepreneurs themselves. They have built successful companies. They have accumulated a lot of wealth, but most importantly, they have taken their time, energy, and money to turn around and support the younger entrepreneurs, the newcomers, and help them to be successful. Some of them are still investing on an individual basis. A few of them have raised early stage venture funds, and these guys around the table, they are familiar with who I'm talking about. I think for Hong Kong to attract funding from US, Europe, mainland China, all of that are good, but Hong Kong needs its own super angels. Until that day, there's not going to be a genuine locally based, well-developed ecosystem to support the local startups, because the local angels are more likely to fund local startups because they know these people, they can check on them, figure out whether they're trustworthy, they're closer to this market where the businesses are being developed. And that's where I can see it could potentially could make the biggest impact. Thank you.
Yeah.
Actually, it's great to have Rebecca here, because this is one of the biggest questions is, there is an angel community here, but the problem with Series A and Series B is we do have the Death Valley. We have to get these young companies across to where growth capital becomes interested. There's plenty of growth capital around Hong Kong, and Singapore also has a similar problem today, or challenge. So, but that's why you need experienced either entrepreneurs who have done it before, or experienced venture capitalists who truly understand that when you take on a company in the early stage, we have to work pretty closely and hard with them to bring in capital so that we can make it across that period of time. In China, you got lots of VCs to come in. Silicon Valley is very much the same way. But we have to recognize that up front. And so when you make an investment here, you have to have that conversation very early on. How are we going to get through this period where we don't have 20, 30, 40, 50 venture firms who can step in when you're going through sort of the teenage years in the company development and really help a company get across? And there are ways to do that, but you have to first admit that we have a shortage of A and B, and then we have to work pretty closely and collectively to get through that stage.
So I think this may be a good segue for one of the topics you want to cover about the Series A gap. Having invested in a number of Series A companies, I actually think there's a phenomenon of Series B gap. You have the super angels, the angels, your Series A who are taking higher risk to fund pre-revenue companies. I think in China you're seeing, big Series A deals with big investment, rich valuation. Then what happens there? Who's going to help the company go through that stage where, the teenage years, who's interested in Series B?
So you mean you could get just sort of stuck there if you're a Hong
Yeah, I think
Kong-based startup?
there's a lot of market dynamics too in terms of, depending on what business you're in. Do you, like on the earlier tech chat, how big is your dream? But what is the reality? How much money do you have to go realize your dream? I think China, US, there's really a much more developed ecosystem, and I think our topics will revolve around this thing of ecosystem. It's like a big support system where you've graduated, you're a successful, for example, Cyberport alum. How do you come back and give back and provide support in terms of business advice and sources of capital to the next generation of entrepreneurs?
Well, is there a Sandhill Road here in Hong Kong, and how active is that compared to other markets that you've invested in?
Well, I've been in both places. There's not a Sandhill Road here. There's not a lot of us who are willing to really take that risk. People are much more focused on revenue and financial engineering. We have to admit that. So I think the few of us that are here have to really figure out how we do this. And that, I have to say, is my two companies here I invested in are not looking to China for the next round of financing at all, not to the VCs. We are going to the US and Europe to get us through the Series B.
Really?
And that's because they are global applications and their markets are not inside of China. But there's not a lot of us here. It's growing, but we have to start somewhere. And if we can gather a group together and show deals to each other and collectively be on boards, you can build an ecosystem and community. But you got to start somewhere.
Yeah, I think that's one of the secrets to Silicon Valley's success, is that there is this venture club mentality. So do all of you cooperate on deals here? Do you know what one another?
Yeah, we do.
Yeah? Okay, why don't you talk about that then? How does the venture club work here in Hong Kong?
Well, for us, we've really, out of the 80 companies that we invested in China, only one is out of Hong Kong. So, but we do, we do co-invest with other funds all the time. So every single fund that invests in healthcare, I pretty much co-invested with. And we like to look at deals and share the risk together. And then, of course, we also see that there are a lot of partners in different funds who can provide different types of expertise. And a lot of the venture investors in China are actually from Bay Area. So they also have and they came from, at least, from our team, everybody comes from operation background. So the ability to help the company on the board level, that's something that we like to do as well. But in Hong Kong, we see each other all the time socially. So, not necessarily talking about deals, but we do see each other all the time. Yeah.
I've shown Nisa, and Nisa has shown me many deals when we were both based in Shanghai. So I look forward to working on our first Hong Kong deal together.
Can you talk about your first Hong Kong deal together?
Well, Convenient Power is actually, they moved to, it's a City U spinoff, City University spinoff, and it's a deal on the tech side. Basically, it's a mobile phone charger that doesn't need plug-in, and now it's being housed in Science Park. But we're actually, actively looking at other companies in this sector. And for me, I'm looking actively in medical device. There are a lot of medical device diagnostic companies in Hong Kong. And very similar to mobile apps, this is something that does not require heavy capex investment. And Hong Kong doesn't have the government, support, huge government support, R&D, or space to build a manufacturing facility. So we need something capex light. So mobile apps is a great idea. Medical device diagnostics, or to a certain extent, we have fantastic hospitals for clinical trials and so forth. So, we can go on quite a bit about different fields that we can invest.
Yeah, that actually segues into a question I had about what are the market sectors here in Hong Kong that you think really have the highest potential? I mean, you talked about medical devices. Anything else? Anna, you talked about how you didn't think mobile internet was, you thought it had some challenges here in Hong Kong.
Well, I think the two sectors that have been quite interesting that more internet related than purely mobile focused. One is fintech, financial technology, given that this is a financial hub and there are a lot of innovations coming out of business models of financial services. So I really hope to find that there will be new emerging technologies that would support these new business models. The other is I actually do find fashion very interesting. I enjoyed Vicky's tech chat a lot. This is a center for design. It's because it's a cultural melting pot. It's been the melting pot for hundreds of years, and it really should not be branded as China's little brother anymore. It really is a gateway to the world. And there are interesting fashion brands that have already come out of Hong Kong. So any kind of fashion-focused e-commerce websites we will look at out of Hong Kong.
One sector that we've seen some significantly increased transaction flow recently is in the biotech space, interestingly enough. Back to your point, with a sort of excellent culture of healthcare and hospitals in Hong Kong, it's very much of a logical fit. But to the best of my knowledge, that industry didn't exist in Hong Kong a relatively short period of time ago. So I would be quite surprised if Hong Kong didn't become a formidable regional leader in biotech.
How would you say Hong Kong stacks up against places like Singapore, which has also tried to jumpstart the whole startup ecosystem? And yeah, Melissa?
Yeah, I spent a lot of time in Singapore as well, and here's how I would categorize it as quite different. One, in Singapore, you have a lot of people who have the ability to code, without a doubt. But when you're looking for the CTO, it's quite difficult in Singapore. In Hong Kong, it actually has the opposite, which is you can find very, very good CTOs here because the investment banks have lots of IT talent. A lot of people are leaving the investment banks who are starting companies, especially in fintech, which is an area I focus on here. So I would say the top talent here is very good. It's world class. They generally have been at Goldman Sachs, Morgan Stanley, one of the other investment banks. I would say the place where we're a little bit leaner is if you want to hire 50 engineers to do coding. That's a little more difficult here, but the high-end talent here is quite good.
You could go across the border and hire those coders from Shenzhen.
Or you can outsource it back to the US or to Singapore.
Okay, good. Anyone else on the Hong Kong-Singapore comparison contrast?
Well, I can talk about pharmaceutical because Singapore has pumped a lot of money establishing CGMP facilities in Singapore, trying to attract the Genentechs and the likes. And I think they have set up some really, world-class manufacturing facilities, but Singapore is really quite far away from the China market. And I think this is what we have. We have researchers and fellows who are very close to China and can leverage and actually do collaboration research together with universities in China. And then at the same time be able to get SFDA approval in China and be able to launch the products. So that, I believe is what's going to happen. And that's something that we see there's some potential for companies that are, coming up, getting ready for that momentum. So, to a certain extent, this is what we have that's quite beneficial. And of course, one of the things that the Hong Kong government has been talking about is to see whether or not phase 1 and 2 clinical data in Hong Kong can be recognized by the SFDA, or now called CFDA, such that we can expedite the whole IND process. So if that's the case, then that would be huge. And I think that's what they're trying to work on right now.
What's the time frame on that?
Well, now that we have a new Minister of Health, I don't know. It's hard to tell.
5 years?
I think, me together with a couple of folks are pushing on that and really trying to, push that along. Yeah.
I know these things take a long time. So if we have a number of startups here, entrepreneurs here in the audience, and they could tap angel investors, could tap family friends, could tap maybe super angels, could tap, maybe the first round of VC, hear from any of our VCs up here on stage. But then getting to the next level, the Series B, sounds like it's a nightmare from Hong Kong. So how do these startups deal with that?
Well, Rebecca, I think, let's face it, it's a challenge anywhere. Let's not underestimate that there's a lot of fallout in our industry everywhere, right?
Yeah.
So it's a challenge to get companies to be anywhere. I think you have to provide three things. You have to provide the mentoring that's necessary, the strategic help, the hiring, but regardless whether you're here or in the Valley, yes, there may be lots of other people around, but to build a successful company is a challenge regardless where you are in the world. It's just that maybe the threshold you have to reach here is higher to get to Series B, but ultimately, it happens everywhere.
One aspect of doing business out in this part of the world that I think works to some extent against that is the fact that overall deal sizes out in Asia are historically smaller than they are in other parts of the world. And consequently, I think that the prospective universe of providers of Series B capital includes some names that wouldn't necessarily be providers of Series B capital in the United States and in Europe, simply because they have dry powder, they need to be deploying it, and they would be amenable to looking at perhaps some opportunities that wouldn't hit their radar screen in other more mature markets where deal sizes are larger.
Well, I do think a number of funds in U.S. and Europe that are based over there, they do that kind of cultural mental adjustment when they look at deals out in this part of the world. They understand the dynamics of smaller funding sizes, but again, it's not their forte. It's not in their regular pipeline. They will review it on a case-by-case basis. So it's hard to come by, and just Hong Kong companies or Asia ex-Chinese companies have to work a bit harder to get noticed by VCs.
Yeah, let me just share my experience. I've been investing in Asia funds for the last almost 15 years. Have I ever met a Hong Kong-focused venture capital funds, regardless which stage they invest in? Never, zero, right? So I guess what I'm trying to say is, on one hand, we need to build our own ecosystem, develop the angel system, develop other funding, right? People fall in place along with their risk appetite. Hong Kong does have its own advantage, which is Hong Kong has a capital markets. If you can develop a company all the way until it is scaled enough to be listed, this is a very nice place that a company can achieve that exit. But short of a Hong Kong's own venture capital funds, I'd say the entrepreneur startup community in Hong Kong needs to be proactive in go out of your comfort zone, go out of Hong Kong, go look for funding. In fact, just like Nisa said, a lot of the Chinese VCs, they come to Hong Kong, they may live in Hong Kong, but they don't come here to look for deals. They come here on the weekends for the lifestyle. They come here to avoid paying tax in China, right? So they are here, but maybe Nisa has been one of the few cases. I don't often hear my venture capital GPs telling me, gee, I'm coming to Hong Kong to look at a deal. They don't. Many of these venture funds probably don't even know that there are certain communities in Hong Kong where they could potentially look at interesting technologies. The other thing I want to say is, again, I related to an earlier remark about how big is your dream, right? I think let's face the reality. Hong Kong, being a market, has its limitation, and that is of scale, right? Very rarely a market where it does not have a sufficient scale in its home can develop a very lively and significant ecosystem. So I think the Hong Kong entrepreneurs need to think about that really hard from day one, right? I don't necessarily agree that you necessarily have to be, here's my dream, is as high as the sky, I'm gonna go for it, right? Look at where is your advantage. And if your advantage is a niche market, is a niche sector, more creative related, rather than needing a mass market of consumers, then go for the niche market, right? If you are not going to build a business or be able to build it to a scale to be going for public listing, then build a business where large corporations, either in China or the world, would like to buy, right? Exit your business through trade sale, and you can do many times over instead of just building a big, huge dream and go to that IPO. How many Hong Kong indigenous venture-backed technology company has achieved $1 billion market cap and listed on NASDAQ? I don't know that statistics. I'll be very excited to learn if there was one, right? But if not, that's not an advantage of a Hong Kong-based startup. There are many different paths to build a successful company. In fact, you know, one of the most difficulties that we're facing today in the Chinese venture regime today is about of an exit, right? The Chinese entrepreneurs tend to say, here's my dream, and their dream is very big because they are facing a 1.3 billion population. They want to go to IPO in NASDAQ. And guess what? The IPO market has not been open for the last 2 years, right? A lot of companies are stuck. Now there is a shift in people's mentality, both the VCs and the entrepreneurs, that maybe they should be thinking about building a company to sell. And one of your other questions is about whether the Chinese technology giants are becoming acquisitive and so on and so forth. And I think that is the advantage of potentially the Hong Kong entrepreneurs could think about.
Yeah, I think there are definitely more options today outside of the IPO market. And Tom, I think you've seen a number of M&A deals, right? And is that something that entrepreneurs should be looking at more today? Is the M&A route rather than the IPO route, which was historically the big glory path to riches?
Absolutely, because the U.S. IPO market has effectively been closed for Chinese companies for quite some time now because of accounting problems, valuation problems, corruption allegations, what have you. The CSRC, the Chinese SEC, back in October, effectively closed down domestic IPO exit alternatives, and now there's fully 800 Chinese companies basically stuck in a queue that shows no sign of ending, waiting
800.
to go 800 and accumulating, waiting to go public in China. Until the CSRC opens that up again, then even a domestic IPO doesn't become an option for investors looking to exit. So I think that M&A trade sales are clearly going to be a way forward for VC funds to exit the investments that they've made, and consequently the deals should be structured at the outset in order to anticipate that.
And are Baidu, Alibaba, Tencent the likely buyers out there?
From my own perspective, yes. I think that this is going to be a game of consolidation, of fewer and fewer, bigger and bigger players.
Nisa, I see you're, and Anna, I see you're in agreement here.
Yeah,
Yeah. I mean, out of the 880, I think about 160 already dropped off, and quite a few more dropping off because of the additional internal audit that's required and so forth. But we also heard that the market may be opening up in May now that there's a new CSRC head who's trying to negate all the other changes that's been done. But we're also seeing a trend of companies looking to go out as a H-share listing in Hong Kong. So there are an influx of companies apparently coming out to Hong Kong trying to list and try to get out of the A-share listing waiting line. But we have just healthcare companies alone, 6 companies waiting to go out in A-share. And I talked to all of my entrepreneurs, and none of them are interested to come to A-share because the PE multiple is a lot lower, and so forth. So, and then there are probably a whole barrage of different reasons. But we're also seeing quite a bit of more M&A. Recently with Medtronics acquiring 2 companies in China, one for $780 million. Stryker just did another deal for $600 and some million in orthopedics. So we see on the pharmaceutical and medical device, there's a lot more activities going on for sure. Yeah.
Well, the 3 tech giants that you have mentioned are, constantly doing maybe smaller deals that won't even get announced. They're hiring teams, what they call the acqui-hires, bring in talent, because there really is going to be, it's not Alibaba, Tencent, Baidu forever, right? Because, back in the US, it wasn't Yahoo forever. So, there's just gonna, there is going to be the next generation of the breakthrough technologies of, super smart entrepreneurs. And the BATs are out there to scout them out. And they really have eyes and ears and contacts and every aspect you can think of. They get so much information, and, and all 3 companies act very fast. Just to ensure that they stay very competitive, and just to make the disclosure that my parent company, SoftBank Corp, is an investor in Alibaba, and we believe
SoftBank.
that it was a very, very good move for Jack to bring on the next generation of leadership, because that's what companies need.
Well, speaking of the next generation, is there a next generation of Jack Ma, Robin Lee, Joe Chen, et cetera? And where is that person going to come from?
I think there's one sitting in the first row looking at his phone.
Yeah. He's going to be on stage later, so we won't reveal him right now, but who else?
I think we've invested with a couple of them as well. Lei Jun is one of them.
Right. Sure, it's super angel investor, right? Behind Ximing.
Vanco, and then we also invested in Xiaomi, his phone company. Yes.
Right. And he was behind YY as well,
Exactly.
which went public on NASDAQ.
Yep.
So it seems like everything he touches goes to gold, right? Is that because the VCs, think if they go behind him, it's not as risky?
Well, it's all the partnership with the right VCs, I think.
I see. So I think, you were talking about this queue of all these startups that are stuck, can't go public, can't exit. How's this impacting the venture capital model and the returns for venture capitalists? When I'm in China, I hear a lot about a shakeout. That's kind of survival of the fittest time for VC firms. What do you think?
I think it's not the first time, at least in Silicon Valley. The year 2001, we went down by almost 60%. So we lost a fair amount. But yeah, I think in China it's very crowded, which is one of the reasons why for the fund I'm doing now is we're focusing from Hong Kong South. We are going to, we're spending a lot of time here. We've looked at over 100 deals between Hong Kong and Singapore. And quite the rainstorm we're getting. But I think there will be a shakeout. There always is as we go through different cycles. But I think that's why you look to other markets in the region that have maybe better economics and high-quality entrepreneurs.
Well, Super Return just finished. I think Rebecca would be the best person to answer this.
Yeah, there were all those LPs there.
Yes, I
right?
can say that the LPs are all very depressed these days.
Oh, really?
Why? Because back in the heydays, during the 2005 to 2007, a lot of venture capital funds were raised. A lot of LPs turned their attention to Asia, in particular China, hoping that they would be invested in the future star of global companies. Question asked back then was, who is the next billion-dollar company, the next $10 billion company? The week before, when we were gathered in Beijing and talking about private equity venture capital markets, and I think on top of people's mind is exit. We just touched on this topic. The deals that have been invested in the last 5 to 7 vintage years, many of them have not been, majority of them have not been exited. Historically, the Chinese investments has always been primarily depending on public listing for exits. The venture deals goes to NASDAQ, New York Stock Exchange. The growth deals comes to Hong Kong. So think about it, especially for venture and especially for early stage deals, that when they were being invested back in 2005 and 6, they were banking on the fact that in about 3-5 years, they're going to achieve the level of scale and be able to list. And in 5 years, the public market was closed. And so exit has been very, very low. Few companies were built to sell for a trade sale, and therefore that's another aspect of where people are rethinking. But the impact potentially could be that not all venture capital funds that exist today will raise their next fund. And that's just the reality.
What
And-
percentage would you say that is?
Oh, you know, if I give you a simple answer, it would have been that because LPs only invest in the top quartile funds, I would say perhaps at minimum, the bottom quartile 25% funds should not exist anymore, and possibly half of those would be very, very difficult to raise the next funding. But I think at the level of the deals, it's the same phenomena, right? If you funded 50 deals in the last 5-7 years, and many of them had gone through multiple iterations of business model and still couldn't make it, it is going to be very hard to raise additional funding.
So will all the funds that are represented here get their next fund?
We'll see how many IPOs they can generate.
Okay, good. All right, and how big the dreams are. Yes, are there any audience questions? Okay, I see a gentleman here in the middle, 4th row, 5th row. And we'll get to you in the back too next. Thanks.
Hi, my name is Thomas. My company is called Hohojo. I want to share an opinion of what I feel like in comparing the China and the Hong Kong VC ecosystem that you guys are talking about. So we are doing a rental marketplace we develop our rental marketplace in Hong Kong. We're looking to expand in international global level. But what I see from in China is kind of like a confined market. People built a project based on, because, for example, Airbnb is an international rental marketplace. And in China, there's a lot of samples. They built up a copycat of Airbnb. They focus in China, and they get the funding straight away. Recently, there's 10 million investment in China into 2 rental marketplace players, solely developed for China only.
Can you structure this as a question?
Well, anyway, my point is China is like you don't see any big company competing with Google. They develop their own market based on to succeed only in China.
Do you,
So
agree,
I
with, do you agree with his statement?
I do not.
Aha.
Well,
China may be a confined market in some case if you only want to address domestic consumer markets. But remember, just last week we saw some stats. For the first time in history, Chinese outward bound tourists are spending more money in the United States than any other country. A lot of those businesses were initially built to cater to Chinese consumers in country, but increasingly they are being brought upon to outside of China and just in the market that you talked about. In fact, if you look at some of the, there are some of the cases that are just for domestic exchanges, right, the rental market, but there are also business models being funded that cater to Chinese traveling outside of China.
I totally understand.
With the Chinese economy globalizing and Chinese people moving around, I'd say it is almost a necessity for any business developing in China to consider how to make their business work outside of the country.
Yes, my opinion, for example, like Xiaofang, they got listed in NASDAQ. So by the time they got listed in NASDAQ, they are quite confined with the market only in China. They can't compete in a global platform like a truly global rental or buy and sell marketplace.
I think this is changing now. I think you are starting to see the Chinese companies thinking about going global. I think it's a leading edge trend. I think that is on the cusp of happening.
Yeah, I understand.
Yeah.
Well, I'm leading.
Okay, let me get to another question, please. Toward the back.
So I listened to what you guys were just saying about how the last 5 to 7 years of vintages have found a public market exit quite challenging. So are you guys, how do you all think about investments that have more likelihood of a trade sale exit or a strategic exit? Are you developing a little bit more of a bias towards that? Is the pendulum shifting?
Are you an entrepreneur?
Yes, I am.
And your company?
Legend Entertainment. We do sports.
Okay.
Should I give it a try? So, as an investor, we don't really mind. In fact, one of the companies that was supposed to go out in Hong Kong in 2011, when we were preparing, CITIC Pharma, when we were preparing for Hong Kong IPO, they got snatched up by Shanghai Pharma for 520 million cash. So we're like, okay, we'll just take that, rather than wait for IPO. So from us, it doesn't matter. But I think, it's a lot of times, as an investor, we see to the entrepreneur and the CEO and the management team what preference they have.
In your example, it sounds like that was more opportunistic as opposed to planned. But now, as you look at the investments that you're putting into and you're looking at 3, 5, 7 years, are you considering more seriously investments that that have a greater likelihood of trade sale?
I think for healthcare, say for example, 90% of healthcare exit in U.S. is M&A. In China, it's the exact opposite until probably recently. So we are beginning to invest in companies that potentially cannot IPO and simply M&A. And in that case, we have to make sure that they are in the leading position for the sector.
I think as a fund, I think it's not only in the healthcare sector. You have a portfolio of 20 or 30 companies. If the IPO ratio was 90%, then I think we'll all be doing very well. So you always go into investment with the expectation that it could go either way. Of course, there are smaller businesses that you're funding in the niche market that you predict that would get sold in a trade sale. I think that's when you start considering, okay, in the funding life of this company, of this venture, you don't want to end up in a case where the company is overfunded, because when it comes to a sale, all the stakeholders come together, the founders come to the table, and the whole liquidation preference and who gets how much money, it all gets renegotiated. So you have to set your expectations when it comes to a sale, because of course, if the exit price is 20 times, 30 times of your original investment, you wouldn't have that problem. But if you're dealing with a 1x, 0.9x on return situation, there's going to be tough negotiations.
So David, you asked, is there a shift? Yes, definitely. From a investor LP's point of view, if I'm looking at a fund investment today, either it's a fund that I've backed before or it is a new fund. The shift being that in the past 5 years, we've heard enough of the IPO stories being told by the GPs. Today, we are particularly looking for people who have had track record and history to demonstrate that they were able to exit their investments, not just through IPO, but also through a variety of different strategies, including trade sale.
So when you invest in a deal from the outset, do you look at it as its potential for the trade sale? I mean, and do you have to structure the deal in a different way if you're looking at the trade sale rather than the IPO?
Well, I think you want the option. I always look for entrepreneurs who understand that along the way you're going to have to evaluate whether you continue down the path of trying to do an IPO or you have to be open-minded to do a trade sale. But I think that certain companies lend themselves better to being an option for both, an IPO or a trade sale. But if you get into a market segment where a trade sale is not usually available, it's harder. You have to build that into your risk profile when you're making the investment. So I much prefer to have entrepreneurs who are open-minded to taking either path, but understanding that along the way you want to build a great company and options will be there. But have an understanding you're also going to have to evaluate it from time to time depending upon your own progress and changes in the market.
I agree, and consequently, when you're structuring the transaction, at least from a legal perspective, you want to be doing it in contemplation of pursuing either of those two processes. And I think, in fact, it's beneficial that the optimal structure for both is pretty much the same. You're looking for a simple, clean corporate structure, shareholding structure, as is possible in order to allow the company to obtain its funding objectives. Because if it's needlessly complicated, then it makes the IPO and a trade sale more difficult. So keep it clean, simple, and then that works for both objectives.
For the oh yeah, Lisa, go ahead.
One more thing is actually because of the M&A trend, we're actually seeing more strategic investors coming into play. And so we're working on a deal where right now, where strategic, we have to basically put in terms to make sure that the strategic will not have the right of first refusal to acquire the company at a very cheap price. So I think having a smart financial investor to help you negotiate with a strategic investor at the same time is very important, and then a good lawyer, of course. Yeah.
Of course.
Yeah, I'm aware of some Hong Kong-based startups here that have corporate strategic investors, including Google Ventures. Okay, yes, over here. And if you would just please identify yourself and your company.
Thank you. My name is Tony from, I have a Hong Kong company, AP Startup.
And what's the name of it?
AP Startup.
Oh, AP Startup. Oh,
That's
okay.
me.
All right.
Thank you.
Thanks.
Right, so there was a lot of opinion expressed of the dearth of funding, either from angels or Series A or even Series B, so that there's very little funding, we agree. I'd like to ask, do you have an opinion on crowdfunding, which is the latest trend coming out of the US?
Yeah.
Jobs Act from the States, and I understand that equity funding is available in certain parts of Europe. Does the panel see that as a trend, and do you have any views?
That's a good question.
Well, I can speak to the Jobs Act, which is a significant relaxation of the US SEC rules in order to allow so-called emerging growth companies to go public in the United States. Emerging growth company is defined as a company that has $1 billion or less of revenue. So fully 90% of every single IPO candidate entering the market would fall into this definition. And there are streamlined procedures for these companies to raise capital. They can file confidentially with the US SEC. They have abbreviated financial statement reporting obligations. They're relieved from certain aspects of internal control that are otherwise required. So It's a very significant change in U.S. securities laws and the way that companies access the markets. That said, with approximately 1 year of history between today and the adoption of the Jobs Act last year, not many companies have actually taken advantage of it. I think that Chinese companies in particular continue to be plagued by some of the issues that have caused many of those companies to go private as opposed to go public in the United States. So I think that even though the Jobs Act was great in terms of relaxing the rules, it doesn't change the overall atmosphere of U.S. and international investors still being very cautious about Chinese companies going public. So the relaxation in the rules didn't overcome those other more macro issues.
And on the crowdfunding aspect of it, is this something you're facing, the VCs are facing as a new entrant in the market, a new competitor in the market for good deals?
I don't see it personally here at all yet. I think if entrepreneurs want to go down that path and they're just interested in money, it's an alternative. But I think they're missing out on the real value of having experienced VCs.
I'd also say that the actual rules that are going to govern how crowdfunding works haven't been adopted yet. So we know what the law says, but there's still a whole bunch of rules that are going to fill in a lot of the details, and those haven't been published yet.
Well, I can see why the VCs are very quiet, because it's kind of a natural competitor for funding. It's an alternative source of funding. For what it's worth, I've done
I'd like to address that. Actually, it's not. Because, I think most experienced VCs have the same view, is that if people want money, they can go get money. Especially in China, there's lots of money. You look for entrepreneurs who really understand the value add piece, which is, we're your partner, we're going to help you build a great company, we're going to help make sure that you are introduced to the right strategic partners, that we're here as a sounding board to help you go through the tough times as well as the good times. Crowdfunding doesn't provide any of that. So I don't see it as a direct competitive force at all. I just think if people need money, it's another source if they choose that path.
Yeah, I really don't see, I have not seen anyone, raising money for, I just remember, there are people raising money for food trucks in New York on Kickstarter, but I don't think that same team will do the rounds down Sand Hill Road visiting VCs, so it's a different type of source of funding altogether.
Any startups here in the audience that have been crowdfunded? Nobody dares to raise their hand? Oh, one? Okay, or is that a question? Okay, I think it's a question. Nobody in this audience.
In fact, I'm planning a crowdfunding. Okay, and then I'm probably the only one. First of all, my name is Kevin. Okay, and I am probably one of the few hardware startup in the audience, I guess. And then I'm planning playing Kickstarter events, okay? And then what I want to raise is that, okay, in fact, as a Hong Kong citizens, it's very hard to get Kickstarter funding because there's you have to be a US citizen or you have to be a UK citizen. But on the other hand, okay, Kickstarter show us that, okay, for example, Pebble, the Uria, the game console, they raise a lot of fund, not from really end customer because they have really good ideas that that people really want to buy. And then for Pebble, it's really overlooked by a lot of VC. And then on my hand, okay, what I'm looking at the issue is that, okay, Hong Kong is in a much better position than Silicon Valley or in the state to develop hardware because we're in 2 hours with most of the factories in China, and then we can get a Bluetooth engineer or whatever engineer much closer than those counterpart in the state. And then what I really want to ask is that, okay, for Hong Kong may have a unique advantage in making hardware, in making mobile accessory instead of just apps. And then does the panelists have an, will they be interested in investing in hardware startup instead of just apps or whatever stuff?
Okay.
Definitely interest in developing hardware startups. I think the whole risk of being copied, by another factory down the road, it's always there. People copy mobile apps. I think one of the earlier tech chats said it's a compliment to be copied. But I think with a hardware startup, you really have to just build your product roadmap. You just have to be. You can't be a one-hit wonder, right? So I'm sure whether it's crowdfunding, VCs can definitely look into that space. If it's the right team with the right background, we will back hardware developers.
Well, to that, one of my partners, Dwayne, he used to head up Intel Capital in China for 9 years. So he is the perfect hardware person to talk to if you want to talk to him later.
Okay, great. Well, in the interest of time, we're going to move on. And let's give our VC and Dealmaker panelists a round of applause, please. And we could all take a little stretch as I welcome the next session to the stage. So you can say hello to your neighbor for a minute, take a halftime stretch, but don't go away because we're moving right into the next session.